See this huge move right here? That big impulsive wave? Yeah, that's the one. Now here's the thing. Most traders see that kind of move and instantly want to jump in. And that's exactly how they end up with messy entries and huge stop losses. So today, I'm breaking down what I call the Fibonacci blueprint. It's all about finding the balance in price movement, like seeing where the market breathes in before it breathes out again. This method helps you spot those areas where price might pause before continuing in the same direction. By the end, you'll know how to map clean entries, logical exits, and controlled risk. And trust me, the confirmation setup I'll show you later, that's the real reason this strategy works. Here's the deal. When you buy right at the top of a move, your risk to reward instantly collapses. You're basically paying full price in a market that always runs on discounts. Professionals don't do that. They wait for a retracement. The moment when price pulls back into a value, that's where opportunity lives. And that's where the Fibonacci framework shines. It helps define those discount zones where supply and demand rebalance. Think of it as a price map showing you where value actually lives. Alright, let's make this practical. Grab your Fibonacci tool, I'm using TradingView here, and draw from the swing low to swing high. That's it, 2 clicks. Now you'll see a few key levels: 38.2, 50, 61.8, and 78.6. Those are your retracement zones, the areas where price often takes a breather before continuing the main move. Check this out. Price pulls back to this Fibonacci level, then pushes up again. That's market symmetry. It's a structure, not luck. Now once price bounces, where could it go next? That's where Fibonacci extensions comes in. Focus on the minus 23.6 and minus 61.8 levels. Once price breaks above the swing high, those levels act like magnets, potential zones for the next leg. It's just a structure and math. Make sure your Fib settings include 0, 0.382, 0.5, 0.618, 0.786, 1, minus 0.236 and minus 0.618. That's your full map, retracement and extension zones, clean and efficient. Alright, before we just even jump on the charts, let me just say this up front, because it's important. Trading carries risk. If you don't manage it correctly, you can absolutely lose money. So this video, it's strictly for educational purposes only. Now before you start drawing fibs everywhere, slow down. Fibonacci only makes sense if there's a clear trend. In an uptrend, you've got higher highs and higher lows. In a downtrend, lower highs and lower lows. Still unsure? Drop a moving average on the chart. Price above it, you're hunting for longs. Below it, shorts. Once that confirmed, draw your Fib from swing low to swing high for an uptrend and opposite for a downtrend. always from wick to wick. That's how you get accuracy. When prices starts pulling back, wait. Don't rush the entry. You want it to touch the 50 or 61.8% zone. That's your sweet spot. But if price breaks past the 100% level, that's no longer a retracement. That's a structure break. Treat it like a reversal. And this is where the most traders go wrong. They enter the second price hits a Fib level. Don't do that. Wait for confirmation, like a bullish engulfing candle, a rejection wick, or a small break of a structure in your direction. Example, price hits this zone, prints a clean bullish engulfing, breaks a structure upward. That's your entry signal. Stop loss just below the swing low. Target the minus 23.6% extension. That's a structure logical play, no hype, no guessing. Alright, now flip it. Downtrend setup. Draw your Fib from swing high to swing low. Price retraces back up to 50. Price backs up to this Fib zone. A bearish rejection candle, that's your short signal. Stop loss above the swing high. Targets at minus 23.6 or minus 61.8. Simple. A structure, repeatable. See, Fibonacci isn't a holy grail. It's not predicting the future. It's just a structure math. But when you combine it with a trend direction, support and resistance, and candle confirmation, it becomes incredibly precise. It's like having a GPS for market rhythm. It doesn't tell you where to go. It just shows you where the key zones probably are. Alright, if this made Fibonacci finally click for you, hit that like button. It tells YouTube you're actually learning from this content. Drop a comment if you want me to break down Fibonacci extensions next. That's where you really start projecting price waves like a pro. And hey, make sure you're subscribed. I've got more advanced breakdowns coming that'll completely change how you look at the charts.